Alright guys, welcome back to another video. In today's video, of course, we're going to be running down my fair value gap continuation model. We're going to take it a little bit further now and go a little bit more in depth with the understandings of a strong versus a weak delivery so that you can actually identify and anticipate whether you're taking an A plus or an S plus setup or you're actually going to be taking a lower probability setup. And it all really starts from the delivery. So that has allowed me, that special trick that I'm going to show you in today's video has allowed me to receive a consistent amount of payouts. This one's from Take Profit Trader. I've been consistent with Apex, funded Next as of recently, and of course like my funded futures and stuff. But Take Profit Trader has been my #1 prop firm. It is the best prop firm in the game, in my opinion. You know, you get daily payouts with no consistency rules, and you can have up to 5 PA accounts at once. So 5 accounts copy trading. So it's very, very good. Those are the date stamps. You can see I'm currently on a 12-week win streak. And I've already got 13 on lock. I can just take it out whenever, but of course I've got to wait till next week and then I can actually keep the paid approved emails. I show all these on my Instagram story, my Discord if you want to follow me on Instagram or join the free Discord, it's down below. Again, I'm a little up over $60,000 on today's trade. So what we'll do is we'll jump straight from this into the breakdown of my little secret that I'm trying to show you, the little trick, which is the deliveries. Then we'll run over the setup just once more again. We'll go into the charts and break down the 2 trades that I caught Tuesday. You can see down the bottom right, it is the 15th of the 10th. So I ended up taking these trades on the 14th of the 10th on Tuesday. 2 beautiful textbook plays pretty much right off open. Very, very easy. That's kind of what happens every single New York session. I trade this setup. And yeah, like I said, I'm a little over $60,000 that I'm going to be able to withdraw. I did it all on live stream, called both setups on live stream. So if you want to obviously join me, watch me trade this model live, learn more about this, you can obviously click the link down below. Without further ado, let's get straight into the setup. If it's your first time here on this channel watching anything about my fair value gap continuation model, I have shown this many times on my YouTube channel. If you want to watch other videos from the past, you can see them all there. I break down more portions of the model as well, but what I'm going to be showing you is the strong versus weak delivery portion. Okay, so this is actually my bread and butter setup. This is my fair value gap continuation with no FEG. Now the no FEG basically means from the swing high that price creates and the lowest portion of the retracement. Low in this case is this is a bullish setup, right? We don't want any fair value gaps, any bearish fair value gaps obstructing price to move consistently in that direction. Okay, as you know, fair value gaps are like a support and resistance level. So we act as fair value gaps as a level of support, hopefully to hold up and send price higher. Okay, we don't want any resistance levels being bearish fair value gaps in this case, holding us and obstructing us from getting to the swing high and moving through it. So now that we understand the fair value gap continuation no FEG, now we're going to be breaking down what does the strong versus weak delivery actually look like. All right, so this again is the bread and butter setup. This is going to be the most common, and it's also going to be the most successful in terms of mechanically speaking. So when this pattern and this formation actually shows up in the charts, it is going to be mechanically a high win rate if you understand the strong versus weak deliveries. Okay, so if you don't know what a fair value gap is, I break it down quite a lot on this channel, but essentially we have a bullish fair value gap in this scenario. You can see price has made that indication higher, and what this does is it leaves behind a fair value gap. At least you want it to. This is step number 1. Okay. Now to identify a bullish fair value gap, you're going to mark out the first candle's high and you're going to mark out the third candle's low. You're going to see this a lot, whether it's a bearish or a bullish fair value gap, a lot in the market. There's going to be thousands of them that show up every single day. All right. Especially on the time frames that I'm going to be looking at. Now, in this case, you can see that there was an uneven amount of buyers and sellers. Buyers were more in control in this portion of time, and that's why there was obviously no overlapping wicks in this case. Okay, there was more buyers here than there was sellers. This creates what we like to call sort of an imbalance of traders. So what price will do is, yes, it made that indication higher, but a majority of buyers probably missed out on this initial move. And what price will do is it will come down, it will force the market to sell down. So this is going to enter sellers into the market as well. Most of them will put their stop losses above the high, and we're going to fill back in this area. This is going to be at typically a discounted price. So instead of buying all the way up the top here, all right, you're going to be buying all the way down here to find price going higher, which is going to put your stop loss at a lower position, and you're going to have a better fill, right? Ultimately going to be making more money. Now, when you get that little retracement, there's something that you should be paying attention to as well. Yes, obviously the no fair value gap in the way, but when we come into this fair value gap, you only have to come in a very little bit, is the best delivery that you can get. The very best delivery you can get is if you have no body closures inside of the fair value gap, only wick pushouts. Okay, so when wicks come in, that's completely fine. It can literally come all the way through. As long as it's a wick and not the body of the candle closing past this, that would obviously invalidate the trade. All right, and if it closes inside, which I'll show in a sec, it's a little bit less of a higher probability chance of a strong delivery. But no body closures at all inside of the fair value gap and only a wick delivery is going to be the strongest delivery you can actually have with this model. All right, that is typically where you'll want to look for price to then close above the previous candle high. And this closure above the previous candle high, especially pairing with that wick only into the fair value gap, is going to be your highest probability, chance to get a very, very, very easy 1 to 1R, 1 to 2R, or just a win in general. So now we're moving down the scale in terms of probability, right? If you do end up having any body closures inside of the fair value gap, you were to make sure whether it's a bullish or a bearish fair value gap that you're looking for, obviously your setup, is that it doesn't close past the 50% range of the actual fair value gap. All right, so let's just imagine right here is the 50% of the gap. It's obviously not because I've marked it out very rough. I could try and get it closer actually. Something like this. You can see as long as the bodies of the candles remain above that, they don't close on the line or past the line underneath, then that is going to be still a strong delivery. It's not going to be as strong as only wicks visiting the gap, but it is going to still be a strong delivery. And then you get your candle closure above the previous candle high, and that is going to be your signal to go long, and that's going to be another version of a very high probability success rate in terms of you winning the trade. Now lastly, now we've shown a high probability, sort of a medium probability in terms of success rate. What does a lower probability delivery look like? That is actually when we have those body closures now underneath that 50% level of a bullish fair value gap, and it would be above a 50% level for a bearish fair value gap. Now this isn't the worst thing in the world. Obviously it will be a very poor setup if it does close below the fair value gap in general, because that would be an inversion fair value gap. We don't want an inversion fair value gap, right? We don't want to see those closures underneath the 50%. There is a very, very high chance that price will struggle. It might struggle a lot. It might just stay in this area, or it might just end up stopping you out. You realistically want a trade where it spends very little time hitting this fair value gap. You have a strong indication. You don't want sellers to override and start disrespecting this fair value gap, so it can obviously push higher. Right, the less time it spends in the gap, the better the delivery, right? And the more buyers in that case. When we obviously are closing in the gap, this is giving enough time for sellers to keep the price down, to keep it in that general area, and this trade could end up failing or taking a while to get that closure above a previous candle high in this scenario. All right, so now let's break down the two trades that I caught, and these two trades both had a very, very strong delivery. So I'm going to be breaking those down. If you want to go spot any other fair value gap continuation setups with this strong delivery, be my guest. I'm going to be breaking down the trades that I took. I trade between 9:30 a.m. and about 10 to 10:15 a.m. Eastern Standard Time. I'm really in and out of the markets pretty quick because this model presents itself like 3-5 times a day, and I pretty much just take the first or second one presented, and it's always usually a winner. So this model trades at about an 85 to 90% win rate, specifically focusing on end of day P&L or even trades. You can maintain over an 80% win rate. Of course, you have to account for sometimes you get slippage or you use an error or anything like that that will account to affecting your win rate. But I only care about how you finish at the end of the day. So I took two winning trades. Again, it made me a little over $60,000 Australian. So it was about 40k US, 8k around my 5 take profit trader accounts. I called these setups both live. So let's break it down. So basically I was pretty bearish coming onto the day. Really not much analysis needed at all. So I was targeting the end of this new week opening gap right here. So you can see 445 to 6, that is the new week opening gap where we gapped up. Usually when we have new week opening gaps, we fill 100% of the range, not just 50%, not just a slight touch into it, 100% of the range. So that's what I was targeting in my end of day. And right here was a very nice looking London low. So right there, bang. We also had this sell side right here as well. And all I needed to do was, again, I usually like to sit preferably on the 30-second time frame. I like to draw up buy side and sell side targets as well, just so I have a neutral bias. And all I like to do is kind of just let price play out in a session. So what I'll do is, again, I'll play out this first candle. you can see that we have a very, very strong indication. If I play this next candle out, you can see now we have left behind a bearish fair value gap. You can see the first candle's low over here at 929.30 did not meet or overlap with the third candle's high. This is creating a bearish fair value gap. So you can see I've even toggled the middle line of this on. This is the rectangle box, the middle line is selected. Now, for a strong delivery, we don't want any body closures in the gap. Okay, so you can see that we came into the gap with no body closures. So this is our previous candle low. We just want to see a close below the most previous candle. Here we come into the gap, respected 50%. Still yet to see a candle close below previous candle low. We're going to mark our new previous candle. All right, nothing yet again. We're going to mark our new previous candle. All right, we're still respecting this with a strong delivery. This is our third delivery now. Again, we're going to mark out previous candle low. Right, third delivery, no body closures in the gap, no body closures above the 50% and no inversion. So this right now is a very, very strong delivery. Now this is my own fair value gap continuation indicator calling this setup out for me as well. It is a very, very unique and interesting indicator that I love. It's for all my lifetime users that are inside my premium Discord. I think we have like 190 lifetime members that are using this indicator right now. Absolutely insane. Everyone that joins premium, which is usually the monthly subscription, always upgrades because I just love this model. So right here, bang, I got into this trade as soon as we get that candle close below that previous candle low. And notice how price is struggling here, even though we've got 3 deliveries of this gap. Until price actually gets that candle close below, you can see that we don't even interact with this swing point. My stop loss can just go above this right here, maybe 35 points is fine, right? And we're going to target the next sell side point. That's going to be very interesting to see how price reacts off these levels and goes towards all the way here. Now, this is a total of 170 point run. Did I hold this entire way? No, I did not. I actually put it out right here at a 50 point to 50 take profit. And you can see price is now displaced lower. And notice the continuation here. As soon as price gives that candle close, that's where I got out. All right, I originally got out of this first target just because I wanted to secure profit, and 50 points was very, very good for me. I usually only target about 40 points per week, and I end up getting 50 right there. Now you'll see this trade that I call later on got me a little bit more as well. But you can see as soon as we got that candle close off that delivery, look at the delivery. As soon as that candle close came off that delivery, look at that type of delivery. The volume was insane. The directional bias was accurate. Again, there wasn't anything telling us longs in the first place because we have a fair value gap continuation sell, right? This is very, very key. Now, price was then able to displace a lot lower to London. Yes, I missed out on how much was that? I reckon another 43 points. It is what it is at the end of the day. I don't care if I missed out on money. I only care if I made money. Now my model is around about a 90% win rate, over 90% for myself. Others trade it at a different level. Some trade at just 80 flat, some 85, some are even 90s, and some are even 95. It really depends on how many trades you take and what type of trades you take. And those that have a very, very high win rate only actually take deliveries that have wicks into the fair value gaps. Okay, now if I go to the 1 minute here, we're going to switch it up a little bit. You can see that we're reacting off London low. So we swept this. We still have this lower target. I wanted to see price go lower. Now you can see I'm marking out this fair value gap. Now you're probably wondering, Riley, there's all these other fair value gaps. Which one do I mark out? That's not what you're looking to do. You're just looking to see the candle close after it's already respecting one. So we have a strong delivery right here. You can see we have no body closures in the gap, right? No body closures at all. Only a wick into the gap. All right, then we come up a little bit. We're going to keep marking out previous candle low from the moment we hit the gap. And you can see right there, we get that candle close below that previous candle low. That is our entry point exactly there. All right, this is going to be our stop loss pretty much above this level right here. We can go about 45 points, right? From that area again, strong delivery, no interaction with the swing point. Watch it. See how prices, sort of mucking around 3 candles, and then we get this strong delivery. Look at the reaction straight down to here. Now this one I end up holding to the target, right? You can see bang, 61 points. It was just an immediate hit. This one took literally 3-4 minutes to actually hit take profit. And just like that, we were able to secure around 60 points there, 50 points there. Now, don't get me wrong, this is a super volatile day, so point value wise, it was obviously a lot easier. But normally this will give you about 20-30 points very easily on a consistent day-to-day basis. These, again, 2 strong, very, very strong deliveries. A 30-second up the front here, a 1 minute down below there. super easy setup, and I called these two out live. Now, that is pretty much all I have for you. If you want to backtest the lower probability ones and separate it from the high probability ones and collect a better data on that, then I highly encourage you to do so. If you stuck around this long into the video, thank you for doing that. Hopefully this has been of some help. If you want me to keep making videos on fair value gap continuations, all right, my model specifically, let me know in the comments down below, and I keep dropping gems for you guys as much as I can. Other than that, I will see you all in the next video. Thank you for watching. Subscribe, comment, like the video, and peace.